with me, Ankur, Mishra and Kanishka Sarkar. In next 1 hour, we'll bring you all the news and updates that matters to you before opening of market. But let's get started with an eye on the globe. Good morning, Kanishka. How were US markets yesterday?
Very good morning, Ankur. Now, Wednesday, that is yesterday, marked a losing session for the Wall Street, with the S&P 500 snapping its 3-day win streak, and so did the Nasdaq Composite. But these moves were slight, not major ones. Now, the broad market index fell about 0.3%, whereas the tech-heavy Nasdaq that dropped about 0.5%. Dow Jones Industrial Average was flat. Now, while the day's losses put the S&P 500 a bit further away from reaching a new record high, the index is also still just more than 2% below its late February record. Now, those moves come after consumer prices in the US rose less than expected in May, as the consumer price index increased only 0.1% for the month. Now, that's less than the Dow Jones forecast of 0.2%. Core CPI, which excludes food and energy prices, also increased less than expected. Now, investors are looking ahead to May's reading of the producer price index that is due later today. And the street is also waiting for more developments, that is the final details, especially between the trade talks, about the trade talks between US and China, as the talks between these two countries have been a focal point this week. Now, while officials have reached an agreement in London, the deal still awaits approval from US President Donald Trump and Chinese President Xi Jinping. Meanwhile, US's Besant has hinted at openness to shift the tariff deadline as well. But how are these statements and the tensions in the Middle East impacting the crude prices, Ankur?
Crude oil is on fire. In fact, crude oil gained after jumping almost 5% on Wednesday on spiking tensions in Middle East, with Iran threatening to strike US bases in the region if talks over nuclear program fall through. And its attack. The WTI actually rallied as much as 1.5% to top $68, while Brent settled near $69. US ordered some staff to depart embassy in Iraq and allowed military service members and family to leave the Middle East. Separately, UK Navy also warned that higher tensions could affect shipping in the region. This also impacted not only Brent but also gold. Gold has actually risen for the second consecutive day to settle around 3.320, and apart from that, yields have also come up at 4.4%.
That's right. Let's also take a look at all the events we should be watching out for in today. Now, some key data points there. In India, we'll have the CPI index data coming out today. It's also the weekly Nifty expiry, so we'll be watching out for that. In the US, we have PPI as well as jobless claims data that's going to come out later in the day. In the UK, industrial production data and also trade data is something that we'll be watching out for. In terms of corporate action back home, Canara Bank is expected to mull fundraising, whereas Bank of Baroda is to revise its MCLR rate. It's also the last day to buy shares to be eligible for a dividend when it comes to Canara Bank, ACC, JM Financial, Piramal Enterprises, PFC, Adani Enterprises, Adani Ports, Adani Total Gas, Ambuja as well. Now, in terms of other events, we have the auction of 30-year treasuries later today, and apart from that, Toyota shareholder meeting is also due later today. So we'll be watching out for the key takeaways from there.
So let's kickstart the show with some global headlines tracking this morning. US President Donald Trump posted on Truth Social that US-China trade deal is done, pending final approval from him and President Xi Jinping. He said that newest trade deal with China would provide the US the full necessary supplies of rare earth materials and also permit visas for Chinese students. He said the US gets 55% tariff and China gets 10% tariff. Adding to details of the deal, Trump said that he is working closely with Chinese president to open up China to American trade. He calls it a great win for both countries. Representatives from both sides earlier revealed that deal has been reached on trade after a second day of high-level talks in London. Remember, tensions escalated after China imposed export restrictions on several rare earth elements and magnets used by automotive and defense sectors. Let's listen into some expert views on the same.
the broad contours of this deal will be done sooner than later, because I think increasingly in the Beltway, there were lineups of manufacturers telling Washington, the Oval Office, the kind of difficulties that they were facing, especially because of the magnets in semiconductors. These magnets are obviously very crucial to anything from fighter jets to missile technology to computers and so on and so forth. So I think the pinch was being felt by both sides. China did not want to blink first, and therefore it took marathon meetings from either side to really come to this breakthrough. And I think the follow-up will be very, very soon rather than later.
It will not give an inch. I think it will demand its pound of flesh and more as far as India is concerned. And so I think we really have to be, and I know that India, our government ministries, they have been looking around, they have been scurrying to see where they can get these requirements from, even as far as Central Asia is concerned, South America is concerned, Argentina. So, we've been looking at all these places, sources of supply. Of course, the amounts that are present are not very significant. But still, what India's requirements are, definitely they are not also of the same magnitude as of some of the other, countries in the West. So India has been trying that, but we cannot expect any slack from China. They will demand absolutely the moon as far as they are concerned.
All right, those are the expert views coming in on US-China trade deal. The final approval is still awaited on that, though. But in terms of tariffs in other countries, the US president has said he would send letters to trading partners in the next week or two, setting unilateral tariff rates. Now, this comes at a time when the 90-day tariff pause comes to an end around July 9th. Now, earlier, US Treasury Secretary Scott Bessent had told the Congress that it is highly likely that the tariff pause would be extended for countries that are negotiating with the administration in good faith.
All right, high inflation brought about by Trump's tariffs are yet to fully materialize. As per US retail inflation data for May, CPI has increased by 0.1% from April, which is lower than 0.2% that the experts and economists were penciling in. Meanwhile, compared to last year, consumer prices in May rose by 2.4%, which is in line with the estimates. Also, for fourth month in a row, core inflation, which excludes food and energy prices, has come in lower than the estimates at 0.1% versus expectation of 0.3% rise. US President Donald Trump on Truth Social repeated his call that Fed should slash rates after the release of CPI numbers. He wrote, CPI just out, great numbers. Fed should lower 1 full point, would pay much less interest on debt coming due.
That's right. Let's also take a look at the US budget deficit data. Now, the US government has posted $316 billion budget deficit for May, which is down 9% on a year-on-year basis as custom receipts nearly quadrupled to a record $23 billion due to US President Donald Trump's steep new import tariffs. Meanwhile, the gross custom receipts jumped last month from $6 billion in May in 2024. Now, as Trump's tariffs on goods from nearly all trading partners began showing up in significant volumes in port of entry collections. Now, remember, the surging financing costs were again a major contributor to the fiscal issues, with interest on the $36.2 trillion debt topping $92 billion.
And after a week of rather dramatic meltdown between the two of the world's most powerful men, all seems to be finally well between Elon Musk and US President Donald Trump. In the latest news, Trump says it's very nice that Musk expressed regret. This comes after in a tweet which was posted on X, the tech billionaire has expressed regret over his series of social media posts last week. The latest development comes in after Trump took a U-turn in his decision to sell Tesla he purchased from Elon Musk. Remember, tensions erupted over Trump's One Big Beautiful bill that proposes extensive tax cuts which could add roughly $3 trillion in the debt of US.
right. Looks like a change of heart coming there. But now in a stern warning coming in from JP Morgan Chase CEO Jamie Dimon, as he says that encouraging economic data could soon turn worrisome as US President Donald Trump's tariffs continue to escalate trade tensions. Now he adds that Trump's tariffs are yet to affect data like monthly inflation and job reports, but the economy is prone to a downturn if that changes.
Focus to some global earnings. Software maker Oracle reported its Q4 earnings, which surpassed its earlier guidance. It has raised its fiscal 2026 revenue target to over $67 billion. The company forecasted 16% growth. It also expects over 70% growth in its cloud infra segment. Meanwhile, the share saw an uptick of 8% in extended trading.
That's right. Moving on to some more updates now. After a 5-day intense protest in downtown LA against immigration and customs enforcement, the police department has made nearly 400 arrests, including 330 undocumented migrants and 157 for assault and obstruction, including one for the attempted murder of a police officer. Most of these detentions were made for refusing to leave protest areas despite police orders. 4,000 National Guard troops and 700 Marines have been deployed to help quell the unrest. Some of those National Guard troops are now authorized to detain people until the police can arrest them.
With this, it's time to take a very quick break, but don't go away. After the break, we'll tell you how are Asia Pacific markets responding to the global news. In fact, all the Asian pairs are in red, barring Kospi. Nikkei on your screen, 0.7% down. Similarly, you can see Hang Seng is also down 0.8%, followed by Shanghai, which has opened in the red and down 0.2%. The only market which I was talking about is Kospi, which is up 6th day in a row ever since the new president has taken over. A lot of money is flowing into South Korea, and Kospi is up around 0.7% as we speak. So the statement which is coming from Donald Trump regarding unilaterally setting the tariffs has not gone well with the Asian peers, and you can see a negative impact coming in on Asian markets, barring Kospi, as well as Australian markets, which has just slipped into green territory but trading flat. So Nifty implied open is also indicating a negative start with 49% down as we speak. Kanishka, looks like negative cues coming in from Asian peers.
That's right. We did close actually on a negative note on the Wall Street as well. So let's see how that pans out for the Indian market. But with that, it's time to slip into news for the hearing impaired.
Soybean and sunflower from 20% to 10% is the reduction. The reduction effective immediately and it aims to lower cooking oil prices and curb retail inflation.
That's right. Now let's take a look at SEBI's move on UPI handles. Now SEBI has introduced, and I quote, validated UPI handles and SEBI check. Now these are the new frameworks that will go live from October 1st of this year. Now according to this, only SEBI registered intermediaries are to use at valid UPI handle, and investors can securely and identify and pay legitimate SEBI registered entities. Anurag Shah is joining us with all the details.
To enhance investor protection and to combat frauds, SEBI has issued a circular of validate UPI handles, and it will be applicable from 1st October 2025, and it will be mandatory for all SEBI registered intermediaries to validate their UPI handles under the new rule. From 1st October 2025, the SEBI registered intermediaries like brokers, like advisors will have a UPI handle with a suffix of their category in which they are working, like broker, so it will be BRK for advisor. there will be a category mentioned in the username only, and for the UPI handle also the word validate will be there. So investors or those who are making payments will be aware that the right payment they are making, and after the payment also a thumbs up sign in a triangle also will be shown. So for the investor, they'll nothing need to be worried. Their existing SIPs will continue, but for the new SIPs, they will have to make sure that the @ valid should be there for all SEBI registered intermediaries. So, but these new rules will be applicable from 1st October 2025 only. So after 1st October 2025, if you are making a UPI payment to any SEBI registered intermediary, just make sure that the UPI handle need to have a valid name in it.
Thanks, Anurag, for all those details. So investors need to note one important point, that they do not need to do anything if your existing SIP is there. There is no change which is there for you from SEBI. The whole steps are there to protect you, not to disrupt you. Moving on to another ET Now exclusive. In a bid to bring clarity in passenger charts and eliminate anxiety among passengers, Railways may finalize the reservation charts 24 hours before the departure of train rather than the current 4 hours. Samir filed this report.
To put an end to the anxiety and to eliminate the uncertainty amongst the railway users or the passengers, the Railway Ministry is exploring the possibility of the finalization of the passenger chart, the reserved passenger chart, 24 hours prior to the departure of the train. Currently, the system is that the passenger reserved chart is prepared 4 hours before the train departs, but now the Railway Ministry is looking that it can be prepared 24 hours or almost a day before the train departure time. And not just this, top level sources have informed that a trial has already begun in the Bikaner Rail Division. Trial is currently undergoing and it will take for a few months that this trial will be on, and based on the outcomes the assessment will be done, and if certain tweakings will be required, then that will be done by the Railway Ministry before the pan-India rollout of the big ticketing reform that Railways is looking at. So with this 24 hours before the train departure time, the chart preparation, that this bold move that Railway Ministry is looking at, they understand that this will help to eliminate the anxiety and the uncertainty amongst the passenger when it comes to have a status of their ticket that they have booked in. Also, this will be helpful for the passengers who have to travel a long distance to reach to the station and then to catch the train. Also, the Railway Ministry understands that at a time when of the total ticket bookings which is being done, the reserved ticket bookings of the total, 84% is being booked through IRCTC platform. So this exercise can be, if not easily, but it can be done or it can be achieved. So that's the larger goal that the government is looking at, that they want to roll it out as soon as possible. Currently the trial is on, and based on the outcome, a final call will be taken up by the Railway Ministry very soon.
All right, then big ticketing reforms likely to come in. Now let's keep it with the railway space. Now Indian Railways has also issued new rules for Tatkal ticket booking. Now government notification titled Modification of Tatkal Scheme says that the first 30 minutes of Tatkal ticket booking will only be available to individual online users and to the persons who will book tickets from the PRS counters at the station. Now ticket booking with OTP based verification, that comes into effect from July 1st. Samir joins us with all the details.
The Railway Ministry has announced certain modifications in the Tatkal rail ticket booking mechanism, or the system that aims to bring much more transparency in the entire booking mechanism. So from 1st of July, only Aadhaar authenticated IDs, the IRCTC ID, can actually make the online Tatkal ticket bookings. And even if a passenger or a user is going to the PRS counter or the railway counter for a physical ticket, there also Aadhaar authentication is going to be mandatory. So the bottom line is that Aadhaar is going to be the mandatory rule which will be put in place for booking the Tatkal rail ticket. In addition to this, an additional security layer that will be introduced from 15th of July is that an OTP based Aadhaar verification will be done. For example, your mobile number which is linked to the Aadhaar card, on that mobile number you will receive receive an OTP, and that OTP has to be placed in at the required place or field, and then OTP authentication will lead to the generation of the Tatkal rail ticket. So that's the double layer security mechanism that the Railway Ministry plans to put up in. And in addition to this, there is another modification that has to be put in place, that the initial 30 minutes of Tatkal booking window or the time will be reserved exclusively for the individual or the single user, and post these 30 minutes, the authenticated travel agents, they can actually make the Tatkal rail ticket bookings. So with this sort of mechanism, Railway Ministry is looking to bring much more transparency in the entire ticket booking system, and also to eliminate any suspicious IDs. And when it comes to the suspicious ID, let me add that in the last 6 months, IRCTC has eliminated roughly around 2.5 crore suspicious IRCTC ID. So Railway is continuously taking those steps that aims to provide much more transparent mechanism, and also to help the bona fide users to generate a Tatkal rail ticket.
Thanks, Samir, for all those details. And Cabinet has given green signal to two key railway projects for doubling railway lines in Jharkhand and Karnataka, and as well as Andhra Pradesh. The total amount is 6,405 crore. The new projects will add 318 kilometers to rail network and enable 49 MTPA of additional freight. Let's listen into Union Minister Ashwini Vaishnav on railway projects.
जिसका आपके सामने वर्णन है। दोनों रेलवे प्रोजेक्ट्स हैं। एक है कोडरमा से बरकाकाना डबलिंग, दूसरी है बल्लारी से चिकजाजूर डबलिंग। दोनों काफी बड़े सेक्शंस हैं, 133 किलोमीटर्स और 185 किलोमीटर्स के, और दोनों के दोनों इकोनॉमिक एक्टिविटी पॉइंट ऑफ व्यू से बहुत इंपॉर्टेंट है, कनेक्टिविटी पॉइंट ऑफ व्यू से बहुत इंपॉर्टेंट है, और ट्राइबल और जनरल पॉपुलेशन के मूवमेंट के हिसाब से बहुत इंपॉर्टेंट।
All right, then lots of developments coming in on the railways front, but let's shift focus. Now, the government is also mulling setting air conditioner temperatures no lower than 20 degrees Celsius and no higher than 28 degrees Celsius across all sectors, including cars. Now, this is amid rising temperatures due to climate change and also increasing use of cooling systems. Samir filed this report earlier. Let's take a look.
In a move to achieve better energy efficiency and also to reduce the energy consumption, the government is looking to set a standard cooling range of ACs, and these ACs will be not just the home ACs which are used at home, but the standard cooling range will also be set for ACs used in hotels as well as in the auto space, for example the cars. So that's the standard cooling range that the government is looking at, wherein the range that government plans to fix it, that the minimum cooling temperature will be of 20 degrees centigrade, whereas the maximum will be of 28 degrees centigrade. So the 20 degree minimum and the maximum is 28 degrees centigrade. That's the cooling range that government is looking at, that will be fixed. And in this direction, the government has already done the stakeholder consultation with the AC manufacturers, those who are working in the home space or for the hotel industry or even for the auto space. With this step, government plans that they will be able to save energy significantly. The larger goal is that by year 2035, 60 gigawatt of energy consumption can be achieved by this one single step. And why so much focus on ACs? It is because that the AC industry, which currently has a penetration level of roughly around 10 to 12 crores, it is growing at a double-digit pace and is likely to achieve a 25 crore penetration by year 2030. So that is the picture that government is looking at, that AC penetration is increasing, and one single step can actually help to reduce the energy consumption and also enhance the energy efficiency as well.
Let's also listen to some of the reactions coming in from the customers after government is mulling setting air conditioner temperature no lower than 20% and no higher than 28 degrees Celsius across all sectors. What customers have to say?
Decreasing AC temperature, it does not, I don't think so it will affect directly to the climate change. I think we should concentrate on other different topics such as carbon emission, like electrical vehicles. We should sustainable development. According to Paris climate change, we should follow that guidance.
So we should focus on more renewable energy, not using fossil fuels, using EV cars, and now we're also focusing on solar and other renewable energy. So sustainable development should be the new norms norms. Just decreasing the temperature won't make it.
Chennai is one of the hottest cities in the country where the temperatures during the summer go peak high. There might be many people who want that cooling that the 16 or 17, 18 degree offers. Why can't they concentrate more on building a more infrastructure for solar energy?
This has to be seen more as a trial on a trial basis. So if it is going to save the energy for the nation and for the country as such, because the power grids are all heavily loaded nowadays. So we need to look at whether it is going to really reduce the electricity consumption.
First thing we should consider is the health of the person. Sometimes people may not be able to put up with too high temperatures or too low temperatures, so it is an individual liberty. So I won't say a blanket no or a very affirmative yes. If it's a good move, it's something that helps to say tackle climate change, then it's good.
All right, then mixed views coming in on the government's plan to standardize AC temperatures. But let's shift focus to the quick commerce space now. The quick commerce and food delivery, the two fast evolving sectors. Now, both these are buzzing in action. Rapido is making its move into food delivery. Big Basket is scaling up its cafe play, while established players like Zepto and Blinkit are also feeling the regulatory heat. Now, adding to that, the growing unrest among gig workers in restaurants and the shake-up is hard to miss. Anjali brings you a roundup of all the latest buzz from these industries.
Well, let's start talking about first the food delivery business, which is set for a major shake-up now that we have a couple of new players which have entered this space, starting with Rapido, which has now started onboarding restaurants on the new food delivery business in Bangalore, and it is expected to be launched by the end of this month. What is interesting, what is going to be interesting to watch out for here is the new commission model that this player is bringing, wherein there will be a flat commission that will be charged to the restaurants on the platform depending upon the order value. So any order under 400 will have a commission of flat commission of 25 rupees, and any order above that will have a flat commission of 50 rupees. Now, this is important because this puts the commission charges on Rapido at almost half of what the competitors Zomato and Swiggy have been charging restaurants. Given the average order values, it would translate to roughly 8 to 15% of commissions for the restaurants as compared to the 15 to 30% that is charged by the competitors. But the other player that is going to be entering the quick food delivery space is Big Basket, which has made its plans clear that they want to expand nationwide by the end of this year, and they currently have 18 locations in Bangalore where these quick food delivery services are available on the Big Basket app. This plan on scaling to 50 locations in the next 45 days, and this is happening with the partnership of Starbucks and Cumin, both under the Tata banner. That's what Big Basket is doing. But there are also updates that are coming in from the quick commerce space, especially the regulatory hurdles that they've been facing. Zepto's Dharavi dark store had its FDA license suspended after the norms were violated and unhygienic conditions were found in their warehouses, and the FDA and the FSSAI have said that they are stepping up these inspections and surprise checks at dark stores and warehouses across locations, which would mean that this regulatory glare on quick commerce platforms is going to be stepped up. The FDA license was also the Blinkit store in Pune was found not having the right license, after which they received a stop business activity order as well from the Maharashtra FDA. So there is quite a bit of regulatory glare on quick commerce platforms. And also, if we talk about the partners, which is the delivery partners as well as the restaurant partners, gig workers for Zepto in Hyderabad have called for a strike, saying that they are not receiving adequate payouts, and it can be as low as 10 to 15 rupees per order is what the union is claiming. Additionally, if we look at how restaurants are also voicing their concerns, this is on the different fees. There was a long distance fee that was introduced, and also the increased ad spend is something that they've been calling out. So in all sense, there is a lot of activity happening in the quick commerce as well as the food delivery business, and it is ripe with action.
Thanks, Anjali, for all those details. Moving on, NSE has received SEBI nod to launch monthly electricity futures. Now, this aims to deepen the power markets to support structural reforms under Electricity Act 2003. And this move is there to hedge against electricity price volatility and to enable more accurate price signals. Now, this launch is also aligned with India's net zero target and aligned with energy sector investments till 2047, a year where India wants to be a Viksit Bharat.
That's right. That NSE SEBI nod has come, but we have now Sharad to understand how the exchanges are exactly joining the race for electricity contracts. First it was MCX and now it is NSE. Sharad, break it down for us, please.
Yes, there is a competition coming when it comes to the electricity contracts and all the exchanges. Of course, on June 9th, MCX had received the SEBI approval for electricity derivatives, and on June 11th, the monthly electricity futures approval has also come in for NSE, and of course NSE is having its own power exchange as well. Now, how important are these electricity contracts? This is, first of all, this is a note to the structural reforms which is initiated in the Electricity Act 2003. Interestingly, this will be acting as a hedging tool for pricing volatility seen in electricity and to encourage capital investments across the value ecosystem we are seeing. This also includes the renewable part. Now, the future plans for NSE, they have stated in a press release that they would be introducing more contracts on differences, and they will be focusing on other long duration contracts as well in the electricity derivative space, such as quarterly and annual contracts. NSE had launched a PXIL, the Power Exchange of India, in 2008. Now, of course, Niti Aayog's report is very interesting. They have stated that the government is targeting net zero target demands on initial investment of $250 billion till 2047, and by 2030, the renewable energy such as solar and wind are expected to contribute roughly 50% of nation's installed power capacity. We did a stock run from the 1st May itself, and the BSE has jumped 36%, while NSE in the unlisted space has gone up between 45 to 50%, and MCX also going up as high as 25%.
Thanks for those details. With this, let's slip into a quick break, but don't go away. We'll also bring you which are stocks you should watch before opening of market.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions.
After Trump has stated that he will fix the tariffs within 2 weeks, so you can see that Shanghai is actually trading flat, but GIFT Nifty is now, Nifty implied open has actually now come into positive territory after opening in the red. Last when we spoke, it was down around 40 points, but now 14 points up as we speak. So Asian markets are actually coming off lows, and even Nifty implied open is now showing some signs of green. But let's move on to stocks in news, a segment which Rabinder gets you daily. Rabinder is ready with that list. Over to you, Rabinder.
Company in the investor presentation said that the company has a plan to invest approximately rupees 2,000 crore over the next 5 to 6 years, and company has aimed to expand its mine capacity from current 4 million tons per annum to 12.20 MTA by FY31. Moving to Stellar Technology can be in focus, where company in consortium with Delhi Bitcoin has signed a rupees 2,631 crore agreement with BSNL for BharatNet middle mile network in Jammu and Kashmir and Ladakh Telecom Circles Package 13. This project includes a 3-year construction phase and followed by a 10 years maintenance contract. Apart from this, Zydus Lab Science can be in focus, where Zydus has received EIR, which is an establishment inspection report for the API manufacturing facility at Ankleshwar, and the inspection has been classified as a no action indicated. Apart from this, on back of order win, Railtel Corporation of India can be in focus, where company has received the work order from Southeastern Coalfield Limited and the work order is approx 12 crore. Moving to a City Union Bank can be in focus, where bank decided to raise a fund of rupees 500 crore via QIP. And lastly, SCPC can be in focus, where company has received a letter of award from Prameshi Urja Limited Kolkata for EPC of 133 megawatt AC solar power project at 26 location in Maharashtra, India, for a consideration of rupees 650 crore.
All right, thank you, Ravinder, for joining us with that list of all the stocks that are expected to buzz in trade today. But let's shift focus to some economic news now. Now, May inflation data, that is due to be out later in the day. Varun is now joining us to explain what the street is penciling in.
Well, so Reuters poll suggests that the CPI in the month of May would be around 3%, and this would be around at 6 years low, and this would be the 4th consecutive month wherein the CPI would be below the tolerance level of RBI, that is around 4%. That is a medium term target by RBI. Now, there are two things that are driving the overall CPI. The one is the favorable base. The other thing is the moderation in food prices. No doubt the vegetable prices have inched up sequentially, but if you look at the prices of cereal, prices of pulses, they have been declining. Also, gold, which have been one of the significant contributors to the core CPI, that has been stable on a month-on-month basis. So that would also aid the overall CPI numbers. The core CPI is expected to be at around 4.2% in the month of May versus 4.1% in April. And also the food and beverage inflation, that is expected to be around 2.14% versus 2.1% in the month of April. So if you look at the overall CPI, it is expected to come at around 3%, that is 6 years low, and this would be the 4th consecutive month wherein we are seeing the CPI below 4%, that is RBI's medium term target.
All right, Varun, thanks for those details. In fact, for the full year also, the Reserve Bank of India's target is at 3.7%. But with this, it's time to say goodbye in this edition of Market Cafe. On behalf of Kanishka, me and entire 18 Now team, thanks for watching, but we are leaving you with the words of wisdom. Lawrence Blanco, technical analyst at CLSA Sydney, shares his list of stocks and sectors he is bullish on.
The break of 100 we think is meaningful. Not only does it end the trading range that you had from 2022, but we think it does mark the peak to the dollar bull market that you've had from the 2011 lows. So we think a major trend reversal is playing out. The breakdown from that 2022 to 2025 trading range with the break below 100 gets the dollar index down to the 89 to 90 area. So we think at least another 9% downside in the dollar. And historically, what we've seen, a weaker dollar has been positive for the broadly emerging market index. And if you look at the EM versus DM ratio, that bottomed in December. We haven't made any new relative lows. And it does look like we're retracing against a trend of underperformance that we've seen over the past 15 years. So we really think we're just at the beginning of a re-rating in the emerging market basket. And India, while it hasn't been top performer year to date, we still think it is going to be one of the top performing or better performing emerging markets, and our longer term upside target for the Nifty still sits at over 37,000. So trend is there, and we think continues to improve.
That's of course 2030, Lawrence, but within the year, where do you see the Nifty range? Because it clearly seems like it's just a matter of time that Nifty also will try and play catch up with its global peers, which are already hitting fresh highs.
Sure. I mean, so we wouldn't be surprised through the summer months that we get above the 26,300, then potentially see another consolidation period, and then obviously we think stair step towards that 37,000 area. But yeah, the first target we're focusing on is that 26,300 through the summer.
You say that. But Lawrence...
when the stakes are high and the answers are elusive. There's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight